Good evening, ladies and gentlemen. Welcome to Business Today Television in our ongoing series on how to tackle, invest, and profit from markets that are consolidating near record highs. We bring to you individuals, professionals, stock pickers who have a fabulous insight into markets. They know when to sell and when to buy. In this series, today we bring to you an unusual gentleman. His name is Gautam Shah. He's the founder and chief strategist at Goldilocks Premium Research. This is a 4-year-old technical advisory. Gautam has just completed his second decade in markets and watches charts with a hawk's eye. He gives short, medium and long-term views on stocks, indices and sectors, and helps his clients set up portfolios based on his very intuitive and fantastic grasp on charts. He has many qualifications. One of them is CMT, and he happens to be a very dear friend of mine. Gautam, welcome to Business Today Television, and it's a pleasure to host you. Welcome from Dubai.
Thank you, Shelji. Absolute pleasure to be talking to you again after a long time.
Yes, let's get to brass tacks, and firstly the views on Nifty and Bank Nifty. We've structured this show in a manner where Gautam will talk about indices where he sees long-term trends emerging, where you can profit, and of course stocks within those indices where he finds still some value left despite the rally that we've seen in the markets. Gautam, over to you. We've seen the Nifty correct fairly sharply from say the peak psychological 20,000 level to somewhere like 19,400. Where is it headed?
Well, I've been in the markets for a couple of decades, and I've realized that round numbers play such an integral part in bringing euphoria and fear at the marketplace. Yeah. I think there was a time wherein we spoke about 20,000 on the Sensex. I remember this was 2008. When the Sensex actually topped out at a level of 21,000, and there was so much euphoria around it. And now we are talking about 20,000 on the Nifty. So it's been quite a journey, having seen Sensex 20,000 and now Nifty 20,000 in the last 12 to 13 years. Having said that, I think the market had run a little ahead of itself. There was just a little bit of craziness because after a long time, mid caps, small caps, large caps were doing well at the same time. And yes, India was in a sweet spot because we were the only market in the world, which were galloping while everything else saw a very measured kind of a move. So I think this is a very normal correction. This has helped the charts a lot. The markets are a lot more healthier. The markets are a lot more fitter, and the markets are a lot more lighter. So keeping all of these factors in mind, I think that this is a very normal correction that could be close to ending. And I have been of the firm of view that 19,300 is a solid support. And you have seen in the last 3 weeks, the market has reversed from this number thrice. In fact, today morning, we were at the doors of 19,300, and once again, we have reversed. So I do believe that 19,300 is a solid support. The chances of it breaking is less. Even if it breaks, I think at worst, we go down to 18,900, 19,000, and from there, we rebound. But I do believe that this correction will get bought into very quickly. The market should turn around very, very soon in the next week and a half. And thereafter, we should go back and test levels of 20,000 and eventually 20,400. So I'm not too worried about this correction. In fact, as a chartist, I'm extremely happy that the market is very light. And there are many, many pockets and themes in this market which are looking good. In fact, this is a market to be stock specific, theme specific, and sector specific, and look at things more bottom up than top down. Top down as a strategy worked well in the last 2 years, but I don't think it's going to work well because the Nifty is not going to see a very special move. Expect the Nifty to just stay in this band of 19,000, 20,400 while stocks continue to do well. So that's broadly my view, and I think at 19,300, 400, the risk reward is in favor of going long.
Wonderful. So that sets the trend for the rest of the show. We'll drill down specifically on a lot of stocks. Do stay tuned. Gautam, coming back to the other favorite, which is Bank Nifty, a fairly sharp correction here. We've seen the 100 DMA being tested. The fact that there is no bank which has not announced fabulous earnings, and perhaps the Nifty Bank ran up much ahead of expectations even then. How do you see this chart, and then we'll move sectorally?
The problem with the Bank Nifty is that one stock has become so big that its movement decides what Bank Nifty does, and I'm referring to HDFC Bank. And obviously, after the corporate development with HDFC and HDFC Bank, HDFC Bank is having a very big bearing on the Nifty and the Bank Nifty, and it's been a sort of a underperformer for the last couple of weeks for various reasons, and understandably so, because the development was huge, and I think the stock has been overowned for a very long period of time. So that's probably the reason the Bank Nifty hasn't done well. But if you compare the PSU banking index, which the NSE provides, you will notice that it's still close to 52-week highs. So I don't see much downside for the Bank Nifty because HDFC Bank is also close to a medium-term support, and the Bank Nifty has solid support in the 4300, 44,000 band. And I think there is a very high probability of a turnaround taking place from current levels. And if that turnaround happens, my medium-term working target for the Bank Nifty is about 47,500 to 48,000. But having spoken about banks, I'm more bullish on the PSU side. So if you ask me today, what are your top picks? I would go with SBI, I would go with Canara Bank, I would go with BOB, and some of the smaller PSU banks where I think the charts are excellent. We've seen breakouts after many, many years. The earnings have always been there, but somehow the fascination of smaller PSU banks have never been there. So within the banking space, PSU Bank is what I like, and the Bank Nifty itself, I think from somewhere around 43,500, we should see a turnaround.
Right. So you hit the nail on the head. Let's drill down into PSU banks. Fantastic earnings by State Bank of India, Gautam. It's now India's most profitable company as well as bank. But the stock has tanked very sharply. Apart from SBI, what are the other PSU banks that you're looking at where you see a nice medium-term growth coming in on price?
See, SBI itself, I think, looks very attractive at these prices because at a 19,600 index, I think the risk reward is excellent for commitments into SBI, not just for the short term, but even for the medium term to long term. And because we follow charts, I think the 200 exponential moving average for SBI is somewhere around current prices. So the downside looks very limited, and I'm very excited about SBI over the next 3 to 12 months. But apart from this, I think Canara Bank has been on our watch list. And please understand, stocks like Canara Bank and BOB, despite the 700-point Nifty correction, have stood out well. So anything that stands out in a difficult market environment typically does well when the turnaround happens. And I do see that happening for both Canara Bank and the BOB. Talking about the smaller banks, I think IDBI is something that we have been liking for a long time. J&K Bank has a very good structure. Bank of Maharashtra has a very good structure. But these are not official recommendations that we've given to our subscribers apart from IDBI. So be a little careful when you go lower down in the PSU banking space. I'm still, somebody who looks at fundamentals and technicals together. I'm still focusing on the top three.
Absolutely. So the top three being State Bank of India, Canara Bank and BOB. As you go down in the ladder, please look at the financial parts of these banks and also take another piece of advice. Very nice choice in IDBI Bank, Gautam. This is one stock that has done nothing, despite the fact that it's in the banking space. A lot of fundamental changes and of course events are forecast for IDBI Bank, but the charts are completely quiet, at least for a basic watcher of charts for them. But what are they telling you?
I like to see charts where the basing is really long and large. And I think I see that basing in IDBI. And the best way to read charts sometimes is to go monthly. Yes. Everybody is going to 5-minute charts and 15-minute charts and 75-minute. A lot of times when I want clarity, I go to monthly charts because that gives me a better perspective. So at 62, I don't think there is much downside for IDBI, maybe a 5-7% downside risk. And the upside potential could be anywhere between 30 to 100%. And the basing is so good, and the financials, are in sync with the basing, that it gives me the indication that this stock can actually surprise and could be a potential dark horse for the next 6 to 12 months.
Absolutely. When Gautam talks about a sideways consolidation, remember this has been happening in IDBI since at least, let's just say, October of 2014. So for 9 years, the stock hasn't done anything at all. And given the strength and the tailwinds that we are seeing in India's banking space, especially on the PSU side, and the fact that there is a transaction due from the government side, in IDBI, this could be a dark horse. Point well taken, Gautam. Let's shift focus to another sector which has been ignored by the market, and that's the Nifty IT. We have the index right in front of you, around 200 DMA, and it's been a series of disappointments. But for stock pickers like you, perhaps these are these consolidative phases that you so love, because they allow you to buy something dramatically cheaper, which has the tendency to rise pretty fast. Your views on the IT index and what do you like there?
Tells you one look at the chart of the last 3 months, 4 months, you'll realize that it's behaved like a pendulum. Every time there has been an attempt to break out, there has been a correction on account of results, obviously news flow from Infosys, and every time there has been an attempt to break down, there has been a lovely rebound. I think that's exactly what we've seen in the last 10 days, because after the Infosys results, there was so much negativity that this is a sector that has gone into hibernation, and it just cannot do well for the whole of this year because of the headwinds coming from the US and, et cetera, all those factors. But the turnaround has been very good. So in this 700-point Nifty correction, IT has actually stood out. So it's been a contra rally, and we've been backing it all along. We've been very aggressively pushing this sector to our subscribers at Goldilocks. We like the setup. I think the basing has happened for over 6 to 8 months. 31, 400, 500, once that number is taken out, I think the IT index can go up another 2,000 to 3,000 points from here. So at a 19,500 Nifty index, I see IT as one of the best risk reward plays. And within the IT space, I think two of our favorites are TCS and Tech Mahindra. Tech Mahindra has seen a good rebound from the lows. TCS is as solid as it gets. And after what has happened with Infosys results, I think a lot of money, or a lot of smart money, has moved from Infosys to TCS, which is very visible based on the ratio charts. So mid-cap IT is anyway very, very hot. I think Persistent and the LTTS, the Capit Cummins of the world are anyway very, very solid, and they will continue to do well. But in large cap IT, I think Tech Mahindra, TCS, and Wipro is my pecking order for the next 3 to 6 months.
Okay. Would you care to spend some time on two very high beta stocks in this space, which is KPIT Tech and of course Birlasoft?
KPIT Tech, I think, is now a very understood story. It's been a money spinner. It's been a multi-bagger for a lot of people in the market. But for your viewers, can you enter at these prices? The answer is no. I don't think from a risk reward perspective, there is a sense to be buying Capit at these levels. I remember tracking and recommending this stock at levels of 500, 600. It's almost been a doubler and still looks good for more, but you can't be buying fresh. The reason why people should hold on, because if the IT rally stays, which is my view, it might see a little bit of volatility, but definitely it's going to see a lot more upside. On the other hand, Birlasoft has been an underperformer. So for many, many months, it didn't do well, it didn't participate, and it's now coming out. So if you have to take a slightly longer term view, I would be more comfortable with Birlasoft than KPIT Cummins. I think Birlasoft has built a nice base, seen a good rally. Any smallish pullback of 3-5%, be a buyer there.
Wonderful. So these are high beta, and remember, relatively lower ticket items in the IT space compared with the Coforges, Persistent, and the L&T Mindtrees of the world. Fair judgment so far, Gautam. Let's now shift focus to what has been a fantastic rally over the last 1 month when it comes to the pharma space. A record high on the index, and this was one space that has given tremendous pain for the last 5-6 odd years. Unbelievable amount of, how should I say, depression built into prices as well as the index, and suddenly you see in less than 22 trading sessions a record high on the index. Your views on pharma, and what does still look good?
LG, as they say, no gain without pain. I think that's pretty much describes what has happened to pharma in the last couple of years. For 2 full years, the sector was in a bear market. Stocks were punctured. Many of them lost 50, 60, 70%. We started questioning their fundamentals, and thereafter they went into a base building process wherein there was price correction and time correction, and then the beautiful turnaround took place. And because I'm more of a traditional chartist, I just like the way many of these stocks went through consolidation. I mean, look at Alchem Labs and Dr. Reddy's. two of our favorites. In fact, even Cipla, Zydus Life, I think lovely chart setups which developed over 6 months and thereafter they have rewarded. They were always fundamentally very solid companies. It's just that smart money was parked into some of the other sectors in the market, and
Sujit?
then they realized that maybe they are missing the sector. I think even from current levels, there is potential upside. Our working target for the pharma index is 17,000. So there is good, well, 13% upside even from these levels. But just be a little careful buying fresh at these prices, because there is possibility of a 3 to 5% correction. But I still like the structure of Dr. Reddy's and Alchem. I think Alchem will go on and make new lifetime highs, and Dr. Reddy's could see another 20-25% upside from these levels. So we like the chart setup, and I think one should stay committed.
So two stock picks coming in from the pharma space. Of course, Dr. Reddy's peaked out and is at a record high, but still a lot of value in this particular chart. And Alchem Labs right in front of you, 37.94. There's nothing we can do about prices. These are 4-digit prices and a product of the bull market. But remember, what doubles also doubles. That's been one of the very basic understandings of charts, that you buy momentum which is already existent, and if a fundamentally strong stock breaks above a certain level to a fresh record high, then it makes further inroads into blue sky territory. So that takes care of pharma as well, Gautam. And one of the defining features of this particular bull run has been the wholesome acceptance of PSU stocks, whether it's railways, whether it's defense, whether it is public sector banks, a whole host. In fact, let me share this with you. There are about 76 PSU stocks that I finally made a list of and then added to my technical parameters. And trust me, on any given day, 65% of them are in the green. So what's changed in the underlying chart structures of the Nifty CPSE index, or any other index, or any other stock that you track here, and where are they headed?
See, I think for a decade and a half, PSU stocks underperform the Nifty and the market in general. This despite the fact that they used to trade at a PE of 3, 4, 5, 6, 7. Basically, all of them were single digit PE stocks. And I used to get this question at a lot of seminars, that these stocks hold so much value, they have great dividend yield, why the capital appreciation is not coming? And that's why technical analysis is important, because demand needs to be greater than supply. That's how stocks go up, and that's how bull trends happen. And I think the reason we caught this a little early was because of ratio charts. So if you did a CPSE divided by the Nifty, or the PSE index divided by the Nifty, you will understand that the ratio chart started to bottom out and turned around beautifully 6 to 8 months back. And this is a mega trend, because for a decade, the PSE index did absolutely nothing. And thereafter, we've seen a phenomenal move up. And I think even from current prices, there is no way they're getting overvalued. In fact, they're still undervalued despite the big rally. So I think there is a lot more potential for the entire PSE space. And in this basket, because so many stocks have already run up, I cannot recommend a REC or a PFC at these prices, or a BEL or a HAL at these prices, because I think it would not be right from a risk reward standpoint, which I like to watch. But NTPC, Coal India, Power Grid, the big three are the ones that offer great value on the charts. And I think they could give you anywhere between 20 to 30% upside even from these levels. In fact, Coal India, the way I see it, could be the star performer of the next 6 to 12 months. So focus on PSC, but be selective and do not compromise on quality.
Absolutely. You've sort of summed it up really well. Even while looking at charts, if you can put your first filter as quality, that itself would save you many headaches, plus the fact that a relative underperformance compared with its own sectoral index and the main index is one of the safety nets that you should practice should you get into this kind of a stock picking. I think we've completed one set of the show, and let me just repeat for the sake of those who've joined in, the stocks that Gautam prefers technically over several sectors. So for IT, it's TCS and Tech Mahindra and Wipro. For metals, it's Nalco, Tisco, and Steel Authority. For Pharma, it's Reddy's and Alchem Labs, and within PSUs, he prefers the frontline energy counters, which is Coal India, NTPC, and Power Grid. I think touching on individual metal stocks slipped through our filter, Gautam. Would you care to elaborate on the two or three that you like in the large cap and the mid cap space within metals?
See, metals again has seen a lot of volatility in the last 1 year. When the going is good, it's really good, everything does well. And then suddenly when the tide turns, you just see a big drop. We saw a big drop in stocks like SAIL in the last, 6 to 8 months. But I think the turnaround has looked good in the recent past. I think many stocks like SAIL, Nalco, and Tata Steel are at a point where I think the downside is very limited and the charts have developed beautifully. In fact, even the metals index, we believe that there is a 1,000 point rally that could come up from here, which is about a 15% kind of a move. And even in the entire metals basket, if you see GSPL and JSW Steel, they have been strong all along and they have been trading near 52-week highs and lifetime highs. In fact, if you ask me in the entire pack, JSW Steel is my favorite. I happened to meet the management sometime back and I have heard wonderful things about it. And chartically also, I'm a big fan. So I think over the medium term, JSW Steel can easily become a four-figure stock and well beyond. And some of the other smaller names in terms of prices, I think SAIL and Nalco also fit the bill from a medium-term, long-term standpoint. Again, everything that I'm doing at 19,500 index is risk reward. And I think some of these sectors and stocks that I've highlighted pretty much fit the bill.
Wonderful. So that sort of wraps up the view on sectors as well as individual stocks. Let's shift focus, Gautam, to metals. I want to understand that, there is this fear in the global space that something really bad is sticking in China. We are talking about deflation. We are talking about the Chinese government requesting funds not to be net sellers. We've seen this inverted treasury yield in the US, and the fact that at any given point of time you see more bad news coming out of Wall Street than what you could digest. Tell us these global charts that you see in such great detail. Is there some kind of pain building up for the remainder of 2023 or maybe in the medium term, the next 2 years?
The markets are always the best judge of any development that could eventually happen. And if you study the charts right now, there is nothing to suggest that the global markets are going to go the other way. In fact, US markets, despite the downgrade of last week, there was so much talk around it. They're still steady. I mean, look at the S&P 500, the NASDAQ is still rock steady. The Dow continues to trade above that 34,000, 34,500 band. So I'm quite positive on the US and global markets in general. European markets have been doing well all along. And if you see the Asian market indices, yes, they have underperformed because they have been in a range, but the downside is definitely limited. And to be honest, coming to the bigger point, it's really liquidity versus global markets, because that average investor in India who's putting in that money for SIP and 15,000 crores is coming from him. If you're going to talk about China factor to him, he will say, I do not care. I'm just happy with the Indian markets and what they have been doing, and I have trust in the Indian economy, so I want to put in capital. So I don't think this is really going to be such a big thing, because liquidity, domestic liquidity, which is sticky in nature, it will just cushion any shocks that we might get from global markets.
Right. So let's heave a sigh of relief as far as the daily pain that is coming in from Wall Street, especially from the bond side. It's a bit bothersome, but we'll trust Gautam on this, that there is nothing much to worry about. Finally, let's stick to precious metals, Gautam. Gold. Where is it headed?
See, I've been a big bull on it for a couple of years now. Though there have been patches when gold keeps going towards that level of $2,070. I talk about international prices. And from there, we keep seeing that correction. And then whenever it gets close to 1900, you keep seeing a rebound. So it's been in that 1900, 2070 band for the last 1.5 years. I think whatever happens in the world, you've seen a very quick rebound, from time to time. And the longer term charts, the weekly and the monthly charts, continue to be super solid for both gold and silver. So I think this recent dip is a buying opportunity. anything around $1,900 on gold plus minus $30, and about 22 half $23 on silver. I think if you have a 1 year, 2 year, or a 5 year kind of view, I think the returns will go hand in hand with the benchmark equity indices worldwide. Yes, there will be pockets in mid caps and small caps which will not be able to which will not underperform the gold and silver returns, but the large caps I don't think will do anything special. So 10 to 15% of your portfolio has to be in gold and silver, and these are great prices to be investing into.
Right. So, Gautam, I've had my fill in terms of indices, sectors, and stocks, as well as gold and silver. Is there anything that I have missed out and you'd like to add?
Yeah, I think I must add about the mid caps and small caps, where we've been a big bull over the last 6 months. A lot of people are concerned that, is it going to sustain? Is it run ahead for itself? Is it going to lead to a crash? I think if you do a simple analysis of small cap index divided by the Nifty and mid cap index divided by the Nifty, you will see that the ratio chart has broken out after 2.5 years of consolidation. So I think there is a lot more upside coming for the small cap index. 12,000, mind you, for the small cap index was the previous high. So we are somewhere close to that number. Once that number is crossed, you could easily see another 2-3,000 point upside. So for viewers, stick to mid cap and small cap quality stocks, maybe the mid cap 100, small cap 100. I think the next 6 months to 1 year is going to be opportunities in those two pockets of the market, and not necessarily in the top 100 Nifty stocks.
Wonderful. And these are lovely charts that have come up in front of you. Remember, we've seen about 4.5-5% correction on the Nifty, and a deeper one on the Bank Nifty since its most recent highs. But there is absolutely no shred of doubt, absolutely nothing that has corrected on the BSE Mid Cap 100 and the BSE Small Cap 100 index. And Gautam puts it very well. Just divide these numbers by the value of the Nifty. You will get a ratio. Plot that ratio over the last 10-15 years. You will see a breakout happening there as well. So there is nothing to fear. We have better days ahead. Thank you so much, Gautam. It is such a pleasure hosting you. I hope one of these days when we have you back in India, you will come to our studios and we'll discuss a lot of these wonderful charts in detail. Thank you for spending your time with us.
We will. Thank you, Shalji. Pleasure.
So that's it, ladies and gentlemen. We had a special guest today, Gautam Shah of Goldilocks Premium Research. He watches charts for the short, medium, and long term, and has suggested some wonderful stocks. Do watch this interview twice or thrice to get a feel and texture of how Gautam picks up stocks. Meanwhile, we'll have another phenomenal guest joining us on Monday. He's Mr. Nilesh Shah, the head of Kotak Asset Management Company, and you have another opportunity to ask any question on your portfolio, broader markets, sectors which might outperform or underperform in the coming months. In our ongoing series of Market Masters, it is Nilesh Bhai who will join us on Monday, but you have till 4 p.m. on Saturday to send your queries on the number that's below on WhatsApp, so that those can be taken and you can get fantastic answers. Thank you, ladies and gentlemen. With that, we'll wrap up the show, and I hope you've been adequately briefed on where the markets are headed and where we are likely to be in the medium to long term. Thank you for spending your time with us. Do stick on to Business Today Television for the latest in markets.
What are the 1 or 2 stocks that you would look at in terms of adding to the portfolio via systematically investing over them on a monthly period?